Hi there, everyone, and thank you, Peter Schiff, for joining us today. I have to say, I'm a bit starstruck. I'm in university, but Peter Schiff has taught me more about economics than any one of my courses. So, thank you for being here, Peter.
Oh, my pleasure. Glad I could help.
Yeah, absolutely. So, you're a described Austrian economist, and a lot of people don't know what that is. Can you describe what's special about Austrian economics and maybe what it is?
Well, what's special about it is that it's accurate. I kind of look at Austrian economics is astronomy and everything else is astrology. So, but basically, Austrian economics, it's real free market economics. But what's really relevant about what's happening today is Austrian economics really gives a comprehensive explanation for the business cycle and the fact that the booms are not some natural byproduct of a free market, but really the result of government interference in the market, in particular when interest rates are held artificially low, as certainly is the case now. That leads to a period of malinvestment, but that period can often look like a boom as all these malinvestments are being made and non-viable jobs are being created and resources are being misallocated, and you get these booms, and they're inevitably followed by busts as the market ultimately tries to correct for the mistakes that were made during the boom. We call those bust recessions. Rather than being the bad part of the cycle, the recessions are actually the healthy part of the cycle. The booms are the bad part, but it's the booms that the central banks create. And then when the market brings about a bust, they try to prevent the market from fixing the problems they helped created because they want to sustain the boom or create another boom. And the booms are the problem, the busts are the cure. And in Austrian economics, the emphasis is placed on production, on savings, and investment as the driver of the economic train. Consumption are really the caboose, whereas modern economists, Keynesians, they have the cart before the horse. They think the key to driving an economy is that people are out there spending money, and it doesn't even matter where they got the money. They don't even have to earn it. It's fine with Keynesians if the government just prints it and gives it to people to spend, and they think that's going to grow the economy. But all that does is increase prices because they're only creating inflation.
That's a fantastic explanation. I'd say that a really good analogy that I put, you have to bake the cake before you eat it. And in the universities, they don't teach that. But I know these ideas are catching on because I was actually up at the public library the other day, and guess whose book was on the front of the finance section? It was yours, Peter. So these,
Oh, okay.
the real crash. So these ideas are coming to fruition. But do you think that the bust is coming in the next few months, next few years, or can you predict a timeline for when this sort of reality sets in?
Well, I obviously can't because most of my predictions have been premature. Um, but all booms come to an end. That's the easy part. Figuring out exactly when they end, well, that's the impossible part. But the more the government is willing to sacrifice our future by delaying the inevitable, the longer they can keep it from happening. But the consequences are severe because every time they kick the can down the road, when they do that, they make the problems that they don't want to deal with far bigger, and the consequences of dealing with those problems far greater, which is why they keep kicking the can down the road, because the last thing a politician wants to do is deal with the problems that they helped create. They're hoping that some future politician will deal with it rather than them and take the blame, right? Because basically, whoever's on the job when everything collapses, they're the ones that's going to get blamed, not all the people that preceded them who got out of Dodge, before the shooting. But it's going to happen. I doubt it's going to happen in the next several weeks, but it certainly could happen in the next several years. And if it doesn't, it's just going to be that much worse.
Yeah, well, you've talked about the Fed being afraid to raise rates too much because the whole system is so fragile, so sensitive to even, a marginal increase in the rate. So when they talk about tapering, it's just talking about it. And it's never going to go back to what a natural market interest rate would be. Is that
Well,
your sort of
remember,
perspective?
yeah, but remember, tapering is not raising rates. All tapering is a reduction in the rate of quantitative easing. Supposedly,
Hmm.
the rate hikes aren't even going to begin until the entire QE program is wound down, meaning they've successfully tapered from $120 billion a month of purchases down to zero. And that process could take a year, it could take 2 years. So we're talking about the first potential rate hike not even happening until 2023, 2024. But the problem is, I don't think that if the Fed ever even begins the taper, that they'll never complete it. That before they end up getting to the point where they're not doing any more QE, they're going to have to ramp it up. And so let's say they start at 120 billion a month and they say we're going to taper down to zero. Maybe by the time they get down to just 80 billion a month, we're already back in recession or the market's going into a bear market. And now the Fed, oh no, I got to raise QE back up to 150 billion now or whatever it is. So they're never going to wind it down to zero because long before they get to that point, they're going to ramp it up to where higher than it is now. And so I think all we're really getting from the Fed is taper, if we even get that, because it's possible that just talking about taper is enough to cause the Fed to call it off, because the economy could actually slow down so much before they actually start tapering that they got to call off the process before it even begins.
Yeah, a lot can happen between now and 2024. And if there is a recession, where are the tools that the Fed so-called proclaims to have? Do you think that there would be a possibility of going? I mean, real yields are negative, but do you think nominal yields could go negative in the future?
Yeah, it's possible. I mean, they've done it in Europe, and I suppose the U.S. could do it, but it would be even harder to get away with it and still be the reserve currency and have negative rates. But I wouldn't put it past them to try.
Yeah, certainly it would spell pretty badly, and it might attract some alternative currencies, which is, I guess, where you're getting a lot of traction for. Peter, we know your thoughts on Bitcoin, but I was curious on your thoughts of other blockchain currencies, Ethereum, stablecoins. Do you see a use value for blockchain as a technology in general?
Well, maybe. I mean, certainly there are innovative aspects of blockchain, and it's not hard to come up with ways that blockchain could be integrated, into society and into business models. Although it hasn't really happened because the blockchain has really been around for about a decade, and so far the only thing it's really been used for is for these crypto tokens. There's now over 11,000 of these things, and there's the promise that they're going to be incorporated, into a real use case, and maybe that will happen, maybe it won't. But I think regardless of how blockchain, ends up being used and what value it's able to deliver to businesses and consumers, I don't think any of that value somehow is captured by these tokens themselves. So whether it's Bitcoin, whether it's Ethereum or any one of these other coins, ultimately, I think these things have no value. And so they have market value now because people are willing to buy them, but people are willing to do a lot of foolish things during a bubble. I talked about malinvestments in Austrian theory. The whole crypto industry is an example of a malinvestment. I think it is a complete byproduct of the cheap money of the Fed, and even the rhetoric of the Fed is helping to fuel this speculative mania. So you have a lot of businesses that have been started, a lot of capital has been invested, a lot of labor is being wasted in this industry, coming up with one of these current tokens after another, and people want to buy them because they think they're going to get rich. And why are they going to get rich? Well, because the price is going to go up. And why is the price going to go up? Well, because other people are going to buy it at a higher price thinking they're going to get rich too. And there's no price too high to pay because everybody who buys is going to get rich. Well, eventually the bubble pops, you run out of greater fools, the market collapses, and now nobody wants them anymore because now they're going down, they're not going up, and all the stories of people who struck it rich are now replaced by all the people who went broke. And then that's when the government regulators really come in to close all the doors once none of the horses are left in the barn, to try to save the day from all the people that have been burned in these pyramid schemes, Ponzi schemes, chain letters, however you want to describe them. But that's really what's going on there.
Well, certainly central banks are considering the viability of central bank digital currency. I know the Bank of Canada has an exploratory committee or something like that to explore the possibilities of using that technology in their practices to fulfill the mandates. If you were consulting for a central bank, would you tell them to be scared of cryptocurrencies eating away at their power? Even if they are a product of malinvestment, could they chip away at the power of central banks?
No, I don't think that they're a threat to central banks at all. I think they're a threat to the people who are buying them. I think they're going to end up losing a lot of money. It would be nice if they were a threat to central banks, but of course, if they were, they probably already would have, put an end to it. I think what would be a threat to central banks, and what already is a threat to central banks, is gold. I mean, gold is a viable alternative to the fiat money that central banks create. I mean, fiat cryptocurrencies I don't see as a real competitive threat to dollars, euros, yen, but gold is. I mean, gold was money before fiat currency came on the scene, and it has a much better track record of maintaining its purchasing power than these government alternatives. So I think gold would be a threat. What would also be a threat would be free market cryptocurrencies that were backed by gold and were redeemable in gold. I think they would certainly win in the marketplace. I think people would prefer to transact and certainly to store a digital currency issued by a reputable source backed by and redeemable in real money, in gold. That would be threatening to the central banks, which is probably why they would do whatever they could to minimize that threat with regulation. I mean, that's what they're already doing now with the existing KYC and AML laws that make it very difficult. I know a company that I'm associated with, Gold Money. I mean, they really wanted to have gold integrated into the financial system as a form of payment, as an alternative to fiat currencies, and they ended up having to back away from their plans because of the sheer weight of the regulation that was being thrown on them and the cost to comply. So there, where I think government saw a threat and they did their best to extinguish that threat by running up the cost to the business of operating a competitive threat, whereas absent all that compliance cost, it would be very inexpensive. It's not difficult at all, technologically wise, to issue a cryptocurrency backed by gold. It's very inexpensive to do, very easy to do, but the government makes it very expensive. And they do that for a reason, and that's because they don't want legitimate competition from a superior form of money. Bitcoin is not superior to dollars, let alone gold.
Right. Your argument is that the value of gold is undervalued by the market, not being priced in by traders. That, and this goes back to our previous points that, the Fed talks of tapering and they talk about eventually raising rates. But can you explain why you think that the price of gold is undervalued?
Well, because I don't think the people who are trading gold have a realistic view of how things are going to transpire over the next several years or even decades with respect to central banks and inflation. I mean, most people believe that what we're experiencing now in the aftermath of COVID is just some type of temporary or transitory pickup in prices, and that after this transitory period is over, we're going to go back to the 2% or less than 2% a year CPI days, and they don't think that there's any reason to own gold in that environment, especially if the Fed is going to have to engineer this return to sub 2% inflation with aggressive monetary policy, tighter monetary policy, raising interest rates, shrinking their balance sheet. So there are a lot of assumptions that traders have. And also I think that people are just very optimistic about other risk assets. They kind of think the Fed has their back. If there's ever a problem, the Fed's going to save them, so I don't need any insurance. I don't need portfolio insurance. I got the Fed, so why buy gold? I'm not worried about any risk, and I'm not worried about inflation, so what's the point of buying gold? And then you have some people who say, and I'll just buy Bitcoin, because Bitcoin goes up more than gold. So even Bitcoin on the margin could be siphoning away some of the demand that might normally otherwise be going into gold. But I think when traders are surprised by reality, the same way that they were with respect to the mortgage crisis, where you had people completely clueless about the mortgage problem and buying mortgages, subprime mortgages, thinking that they were going to get paid, not realizing they were going to get paid nothing, that the bonds were worthless. So I think when people wake up to the reality of permanent QE, of permanent 0% rates, and inflation that's going to get worse and worse and worse, it's not transient. This is the beginning of a transition into a much higher inflationary environment where real rates are extremely negative. I mean, even more negative than they've been. And it really is an ideal environment for gold as an alternative. And, I think the bursting of the crypto bubble also will create even more demand. People will be looking to get out of traditional fiat currencies. They'll also be looking to get out of their crypto currencies into something real. Now, they may just buy, stocks or real estate, but to the extent that they want something more liquid, something with less volatility, something that's more of a store of value rather than a speculative investment or a company where things could go wrong. If they just want a real safe haven store of value, I think the last one standing is going to be gold.
Right. Well, here in Canada, we have a prime minister the other day who said he doesn't think about monetary policy. So when you talk about the reality setting in, I think it will set in for politicians when, if interest rates inevitably have to, the market breaks out or, government spending, the inflation gets too high, they're going to be at a crossroads. And the crossroads is, do we raise interest rates and, deter this threat of inflation, or do we keep them low, force them lower, sort of like forcing like toothpaste back into a tube almost. And that would be maybe the only way that you could finance deficits that are.
But I don't even think, they even have the option viably to fight inflation, because the minute they start raising rates sufficiently to do that, you cause another financial crisis and a massive economic collapse, recession. And then how is the Fed going to respond to that? Reverse all those policies, go back to QE, go back to money printing? Well, then inflation returns with a vengeance. So if central banks are serious about ever containing inflation, then they also have to allow the economy to implode and do nothing about it. Right? They can't try to come to the rescue. So if the market crashes, they have to let it crash. If real estate crashes, they have to let it crash. If banks fail, they have to let them fail. Now, I know the government is going to want to bail them out, but they can't bail them out without the cooperation of the Fed. The Fed has to return to easy money to finance the bailouts. Otherwise, the only way government can get the money is by raising taxes. But how are they going to raise taxes in a recession? And whose taxes are they going to raise? And how are they even going to get the money? Because in a recession, their spending is going up. What they're actually going to have to do in the next recession, without the Fed, or a central bank to provide the monetary support, the next recession, the governments are going to have to raise taxes in the recession Otherwise, they have to default on their obligations that they already have, let alone try to incur new ones by bailing people out. So the losses are going to be horrific. The economic pain is going to be horrific if the Fed chooses to fight inflation, which is why it's not going to choose to fight inflation. It's going to surrender to inflation. And then inflation is going to win. And in the long run, inflation will inflict even more economic pain than the pain of fighting inflation would have had the politicians had the guts to do it.
There seems to be, they're scared of a correction. You can't handle it, but corrections are a good thing. That's the point of it. You're correcting mistake. You're reallocating previously misallocated resources. And I'd wish that we had more people who can explain that properly. In the schools that I go to, I study finance right now, and we don't really have the Austrian perspective there. And I know I follow your Twitter debate with your son on Bitcoin and gold, but it seems to be that there's a lacking of general economic education within educational institutions. And it seems that, for you're saying that the Bitcoin trend and all the cryptocurrency stuff, it's part of that misallocation. So that's on one hand of the spectrum. And on the other hand of the spectrum, you might have a lot of young people who are fascinated with socialism. They think it's the answer to our problems. And you're saying maybe both groups are eluded away from reality. And so my question to you would now be, why do you think Bitcoin and socialism is so popular with young people? Do you think maybe it's just the trend of it, or are there different causes? Just what's your perspective on that?
Well, a lot of things, that are kind of foolish can gain popularity with young people more easily than older people who are wiser and who have more experience and are therefore less likely to be fooled. But, I think one of the things that socialism and Bitcoin have in common is the allure of something for nothing, right? Because socialism is appealing because people are told they're going to get stuff without having to work for it. The government's going to provide you with this for free or that for free. And so that has a lot of appeal to people, that they're just going to get stuff, that they're not going to have to go out and earn it themselves. And they're going to have a government to fall back on, right, to catch us if I do something wrong, right? I'm not up on a high wire without a net, right? The government's got this big net, so I don't have to worry about falling. Whereas, the free market may be scarier. Oh, what if I screw up, right? I'm going to lose my money or whatever. So there's a comfort involved in socialism and the idea that you're getting something that you didn't work for. You're getting something for free. The other guy is going to have to pay higher taxes or get less so that you could get more. And it's the same thing with Bitcoin. I mean, what do a lot of young people expect to get out of Bitcoin? They expect to get rich, right? Well, it's not easy to get rich under normal circumstances. It requires a lot of hard work. But this is like an easy way. It's a get rich quick scheme. You don't have to do anything hard. You just buy some Bitcoin and hodl it, right? You just never sell. Close your eyes and hope. And one day you're going to wake up rich. And yeah, it's a fantastic idea, and if it could happen. But none of these get rich quick schemes typically work. I mean, you end up going broke quick, not getting rich. So the young people out there, if you really want to get rich, don't look to cut corners, with Bitcoin, because it's more likely than not, going to lead in the wrong direction.
That's a great way to put it. So both of these, schemes are just coming from the same desire to get something out of nothing, sort of like gambling, right? The house always wins, but some people, there's some extreme ends of the distribution that strike it rich. Like I have some friends, and I'm sure you obviously know plenty of people who have actually succeeded in the get rich quick scheme, but that getting rich will always be at the loss. So your profits are someone else's loss in the end of it.
During the bubble, yes, a lot of people have gotten rich off the bubble, but there's a difference between getting rich because you're helping to enrich everybody else or getting rich at the expense of everybody else. Like the reason that a thief, right, apart from the morality of it is, if I steal your money, right, I got rich at your expense. But if I earned your money, if I provided you with a service that you purchased or goods that you bought that improved your lives, And I do that with lots of other people. And I earn my money because people voluntarily give it to me in exchange for the goods and services I've created. Then my riches don't come at everybody's expense. My riches are a consequence of how much I've improved everybody else's lives. So it's a win-win. Everybody makes money. But what's going to happen with these crypto entrepreneurs is I think they're coming up with businesses that are not actually going to succeed. They're not going to generate profits, but people are being attracted to these businesses and they're investing. And the people who started the businesses are able to take their money off the table by selling shares to these new investors. And then when the whole enterprise collapses, having never really made a profit and there's no real value being added, the money that the guys that got in early make is simply what the guys that get in later lose. And the same thing is going to happen. It's not just crypto. There's all sorts of crazy companies that have been started and have even gone public based on the monetary policy that we have. I mean, if we had honest interest rates that were substantially higher, the vast majority of these companies never would have got started, let alone gone public. So you have all this malinvestment, but people are getting rich. The people who came up with these harebrained ideas that maybe turned out not to be so harebrained from their perspective, because now they're millionaires or billionaires because they were able to sell stock. And you had a lot of Wall Street bankers who got rich, getting in on these, or the VCs get in early and then they make money on the banking fees and all that. But at the end of the day, somebody gets left holding the bag, because if there are no actual profits being generated, and that means that the companies themselves are not actually adding value to society, they're subtracting value, and because they're losing money, they're combining scarce resources in a way that destroys their value. They would have been better off had they been used someplace else, but they were misappropriated due to the bubble. And when ultimately everything collapses and the companies, are liquidated in some type of bankruptcy or they just get shut down, the money that people made getting in early is the losses that everybody else has to suffer because they got in late.
I think you're addressing one of the biggest misconceptions of capitalism right now, which is that it's consumerist, it's over-consumerist. Keynesianism is consumerism, but it seems like the Austrian point of view is, production, saving, be frugal. Sort of like, your parents are immigrants. Where did they immigrate from again?
Europe, different parts of Europe, but Eastern Europe. But, capitalism, the consumer is in the driver's seat in capitalism, as everything is trying to satisfy the consumer. But the consumer doesn't get anything that isn't already produced. As you said, you got to bake the cake before you can eat it. Just because you're hungry, it doesn't mean a cake is going to magically appear. But because people enjoy cakes, entrepreneurs try to figure out ways of baking them. But in order to bake the cakes, they need the ingredients, and so where are they going to come from? So they have to figure out how to organize resources in order to bake a cake so that then, they have a cake to sell. Of course, if they bake a cake that tastes horrible, right, they haven't actually created any value because no one's going to buy the cake, right? So they've wasted resources. So you have to create the cake that actually tastes good so that consumers are willing to buy it. And if you do that, you're rewarded because you can sell the cake for more than it costs you to produce it, and that's your profit.
Yeah, that's the irony of some of these economic textbooks, because you're taught in school in the Keynesian model that potential GDP can be above the real, or that real GDP can somehow be above the potential GDP. If only we printed more money or spend more money or consume money, consumed with money that we don't have. But, if you're building a house, you got 10 bricks and $10. If you have $100 more but no more bricks, then each brick just goes up 10x.
Yeah, and the real solution to those problems is the Keynesian sees a lack of demand and they say, oh, we need more money. No,
Yeah.
An Austrian is just, prices just have to come down. That's all. I mean, if things aren't being bought, it's because the prices are too high. Let the prices come down. Just printing more money, all that means is the prices go up instead, or they don't come down. But you're not going to have any more stuff just because you add more paper.
Yeah, and that's how you drive the economy forward. You produce more stuff. Now you've talked about the United States being in a perpetual trade deficit with these other countries for a while since delinking from the gold standard. I think it was in your video, the death of fiat or the death of the dollar. I can't remember exactly, but with these super low interest rates now, we're not really attracting productive capital. We're attracting, we're sending out money to other countries to buy things to consume, while other countries are sending us goods that we consume, and we're sending them goods that so they can produce. So it's sort of
Yeah.
like it's like a dependency pecking order almost, that that sort of like people can be dependent on a government somehow. We're being dependent on other countries. And do you think other countries are going to continue taking advantage of us in, I guess, the West, maybe the East and the West, in such a
Well,
way that you might
they're
see a
not.
power shift?
Yeah, well, they're not taking advantage of us. We're taking advantage of them, right? Because they're giving us real stuff, and we're just printing them money and giving them that. So the question is, how much longer are they going to allow us to take advantage of them? Now, yes, they are accumulating assets, but to the extent that those assets are, let's say, U.S. Treasuries, they may not have any value in the long run, right? So, I mean, it's better for the foreigners if they buy our real estate and our stocks, so that they at least own something, real, as opposed to just a piece of paper when they buy the bonds. But Americans are able to live beyond their means as a result of this. We can consume a lot of products that we don't produce. The rest of the world produces a lot of products that they don't consume. So they live beneath their means to enable us to live above our means. And I think that is going to come to an end. And, that's going to have, very dire implications for Americans, because you're going to see a big diminishment in the standard of living, the quality of life here in America. People are going to have to work a lot harder and have a lot less to show for it as far as what they can consume.
Right? Do you think, if in such a scenario, that if the U.S., loses its position as world reserve currency, you can't actually have any consumptive power with printed dollars, because eventually no one will want them. And
Exactly.
yeah,
And that's one of the reasons. I mean, if enough politicians actually sensed that Bitcoin was a threat to the dollar's reserve status, if they actually thought that Bitcoin was a viable alternative to dollars, especially other central banks, they would shut it down immediately if they actually believed it. So I mean, to the extent that Bitcoin could actually do what its proponents claim, it wouldn't exist. It would be shut down. It would be a victim of its own success. Unfortunately, it's going to be a victim of its own failure, because I don't think the government needs to do anything. In fact, I think the government is sitting back and waiting for Bitcoin and other cryptos to fail so they can say, "We told you so," right? They think that Bitcoin will make the dollar look good, by comparison. Because, hey, the crash, see, this is the free market is no good. They came up with this crazy money. Government money is much better. The free, this is what happens when you let capitalism work. They come up with these crazy schemes and people lose their money. So I think ultimately, Bitcoin's failure will be used by government to further vilify the free market. It'll be an excuse for even more regulation to protect consumers from this type of investment fraud. And that's why I think, you guys asked me to do this interview, to kind of present some ideas maybe to Canadian government as to, what they should do to encourage or get behind crypto. I mean, in my opinion, the best thing that a government can do is not do anything to encourage cryptocurrency industries, because it's just going to be that much worse when the bubble pops. You're going to have losses, you're going to have unemployment. A lot of negative things are going to be the consequence of unraveling, the malinvestments from this bubble. So the fewer malinvestments that get made, then the less damage to the economy there's going to be. So to the extent that there's a certain community that got overly invested in crypto, where maybe they had some tax breaks or different things to encourage cryptocurrency businesses to set up shop in their area, all of a sudden they're going to be dealing with unemployment, they're going to be dealing with vacant office space, local investors that may have lost their money. There's going to be a lot of problems, when the tide goes out and you have all those people that have been swimming naked.
Certainly when the real crash does happen, there won't be people who will think, oh, it was, overconsumption that did it. They're going to think, just like you went to the Wall Street protests, they're going to think it was the free market's fault, right? And, when the '08 recession happened, I was 7 years old. And when the real crash does happen, certainly people will go out back to Wall Street, I can imagine, and it will be a new generation of people.
Yeah.
Will you go back to Wall Street? Do you have plans to do that if another protest happens? Or
if they did another, well, look, if they did another protest, it'd probably be too dangerous. You look at my video from Occupy Wall Street,
yeah,
and think about today's toxic environment. They probably would have attacked me. So,
yeah.
So you really, and of course, we'd all have to be wearing masks. I don't even know if they, how that would work in between COVID and the toxic environment. I haven't done anything like that. I did a few things after that, a few videos that involved me interacting with people, kind of going undercover. But I haven't done any of those recently.
I wanted to ask you.
People can check them out though on I have a few really good, funny videos on my YouTube channel, Schiff Report.
Sure, yeah.
The Occupy Wall Street one that you just mentioned, I recently went over 5 million views on that, and I didn't even post that until 2 years ago. The original video is 9 years old. It went up on Reason TV, where it got millions of views on various iterations, but then it got copied multiple times, got millions of views on all different platforms. So overall, it's probably got over 20 million views, on all the different channels, which relative to what some of these music videos get, it's not really that much, but for what it is, it's a lot of views.
Yeah, for an hour-long educational piece.
Hour and a half.
Hour and a half long educational piece. Yeah, it's a lot easier to sit through a music video. But certainly that video has really catapulted a lot of people. I've shown those videos to some of my friends who might not know anything or might be, misguided in their economic thinking. And, the way that you went there and can level such complex ideas on a very digestible way.
And of course, I've watched it myself since I've done it. I always think, I should have said that. I could have, I can always think of things that, looking back on where I could have had a more perfect, response to something. And of course, I could have held the mic better. I didn't realize how it was all going to sound. People criticize. I guess I was talking with the mic over here. I wasn't really like, doing it the right way. But I still get a lot of positive feedback from that video, not just from the one I posted, but from various other sites. But at least once a week, sometimes more than once a week, somebody emails me from somewhere in the world, letting them know that video changed their life and thanking me for doing it because it really helped set them on a path. Maybe it didn't completely convince them to not be a socialist and to be a free market guy, but after viewing that, they did more research, they did more reading, and I started them on the journey that led them away from socialist beliefs that they had before, and now they're done a complete 180 and they're free market libertarians. So, and they credit that video for opening their eyes and sending them down that path, which is the exact reason that I did it. So it's doing exactly what I had hoped it would do.
Yeah, and the numbers speak for themselves. So yeah, we encourage everyone to watch that video. I wanted to ask you a very theoretical question, but it might not be that theoretical in the near future. So part of the argument for gold is that, it can't necessarily be created. right? It cannot be abused by central banks. They can't just print more gold.
Yeah.
Obviously, you can find deposits, but that got me thinking. If we're seeing a rise in space technology, all these guys going to space every week. There's a new billionaire going to space, and there's asteroid mining there, and you find precious metals in the trillions of dollars in present value terms. And so my question is that if there's a possibility that private companies or governments or NASA or whatever finds gold on space galore, that having a gold standard might not be the best idea. So should we have a backing to a currency that's on the elemental chart?
Well, even if there is gold in space, and I'm sure gold exists in space, in all likelihood, it's rare in space, just like it's rare on Earth. So, yeah, you wouldn't expect to see an asteroid that's made of solid gold just floating around out there. But I know there's this one that the Bitcoin community tries to make it as if there's this gold asteroid that's out there just waiting to be mined, and there's going to be so much gold on Earth after we bring it all down that it's it's going to be so plentiful. But all that is nonsense. Look, we are running out of gold here on Earth. I mean, right? All the easy gold to mine has been mined, and so the deposits that are still there, are more and more expensive to develop. So it would be nice if at some point in the future, most likely it won't be for many, many years, if not not decades, hundreds of years, before we really have the wherewithal to look for and mine gold in outer space. I mean, maybe there's gold, in our solar system, in the asteroid belt somewhere. I mean, if we have to go beyond our solar system, you're talking about, phenomenal costs likely and time, to do that. So I'm not even sure when we'd have the ability to look beyond our solar system. But certainly looking in our solar system is something within the realm of possibility. But my guess is that to the extent that we develop, we discover gold in outer space, and we can actually mine it, the cost of doing that and then bringing it back to Earth would be very, very expensive. So you would have to have a price of gold much, much, much higher than what we have now to make that viable. And my thought process is most likely, to the extent that we start mining in space, most of what we mine will probably stay in space. It'll probably be used, to build stuff in space, and it may never return to Earth because it may be a waste of money to ship stuff back to Earth when it could be used if we're out in space. Maybe we have space habitats or space cities, and we're on a different planet, or we're on an asteroid, or we're building spaceships. Maybe those minerals will be used in space where they're developed. I have no idea. But all this stuff is pie in the sky, and it's crazy for the Bitcoin community to say, oh, this is a real threat to gold, when what's far more likely is that somebody figures out how to hack into the blockchain, the supercomputers come around that can crack everybody's wallet wide open, that somehow something happens to blow the lid off the theoretical supply limit of Bitcoin, and it's not 21 million, but who the hell knows? I mean, there's all sorts of more realistic threats to Bitcoin scarcity than there is to gold's. And of course, Bitcoin is already threatened by over 11,000 other cryptocurrencies that you could choose from. There's only one gold. You don't have, you can substitute certain metals for gold where gold's characteristics are not really required, but where they are required, you need gold, and they're not inventing, new golds. Gold came from a supernova explosion. Those are pretty rare.
I would remind you that, it took 60 years from the first plane the Wright brothers take off to get to the moon. I don't know. I think it could be quite possible that, in the next few generations we start. But yeah, you're absolutely right about, there's a technological component to Bitcoin that we might not understand now, but we might understand in the future, and that might totally invalidate its.
Oh yeah, it looks so complicated. We think that the programming is so foolproof and complicated. Maybe in 100 years, an elementary school kid would look at that and it would be like simple. Well, what the hell? What is this little thing? I can crack this. I don't know. I mean, technology is constantly
Yeah.
advancing and improving, and we're judging Bitcoin's invulnerability based on today's technology. We don't know what tomorrow's technology is going to look like, and how it might transform that. And people can say, well, Bitcoin will stay up with it. So if the ability to crack it gets better, well, the ability to defend it will get better. I mean, nobody knows this. This is all pie in the sky. But again, at the end of the day, what do you have when you have a Bitcoin? You don't have anything. People keep telling me, well, you have a store of value. And I have to keep going back to them. Well, what value are you storing? What can you do with Bitcoin today that I'm not doing with it, and that somebody in the future will be able to use it for? With gold, I can take gold and I can make a watch out of it, right? I could take gold and I can make a computer chip because it can conduct electricity. If you're going to go to space, gold is in aerospace. These rockets, all this circuitry, they have gold in there. Certain times they need to use gold because they need the best. It can't fail, and they have to make it out of gold. It's used in dentistry, in medicine, all sorts of ways. So I can take gold now. I can take physical gold and I can use it for those purposes. I can sell it to somebody else today who needs it for those purposes. Or I can hold on to it. I can store it so that in the future I can use gold for those purposes, or sell it to somebody else who needs it for those purposes, right? But nobody needs Bitcoin for anything today. Nobody buying Bitcoin needs it for anything. People are just buying it because they think the price will go up, because they think somebody else will buy it. So there is no value to store. There is just a price. And you can't store the price. The price is a function of what somebody is willing to pay. And just because there's an idiot willing to pay, $48,000 for a Bitcoin today, doesn't mean those idiots are going to be around tomorrow.
Yeah. Reality
They
sets in.
might wise up. Some of them aren't necessarily idiots. They're very smart people who are just thinking idiotically. You have a lot of smart people that have gotten taken in by the crypto craze. But of course, there's also even more smart people who have avoided it. So it's not like, you have a monopoly, like all the smart people are on one side. They're not. But the smart people who got behind Bitcoin make a lot of noise, right? They get a lot of press, but that's by design, because they're pumping up Ponzi schemes. You need lots of media. You need lots of hype, because you got to sucker in new buyers. Otherwise, the whole thing implodes.
Right. Certainly, so I have to admit, I have some Bitcoin, I have some gold, and
congratulations. Now you can
if you're,
sell.
I have been. After watching some of your interviews, I've been taking profits at certain price points. But I would say that there might be a never-ending stream of those idiots, and in which case it might make you not an idiot to join in on the process.
Well, yeah, but nothing that can't go on forever will. That's why Ponzi schemes are illegal. Of course, everybody who starts one thinks that it can go on indefinitely. Like Bernie Madoff probably assumed that he would his would go on forever. At least it would be his kid's problem after he died. Instead, it became their problem before he died, because they ran out of new investors.
Right.
And Ponzi himself couldn't make the Ponzi scheme work, and he invented it. So
yeah, it's built-in failure. So last question: what would you say to young people wanting to learn more about economics but might be confused, or are attracted to socialism, or maybe in the hype of Bitcoin clouding their rationality? Just what would you say to them? What would you say to me, maybe as a perspective?
Yeah, well, Bitcoin, there's a lot of good economic lessons in the process for marketing Bitcoin, and the road that people take to get to Bitcoin, because it does criticize fiat money and central banks, and talk about inflation and all these things. So a lot of that is good, and I'm glad that young people are learning that. It's just unfortunate if it then leads them to Bitcoin, and hopefully when they lose a bunch of money on Bitcoin, they won't reject that philosophy as well, right? It won't tarnish what they learned about the free market or what they learned about the evils of central banks or paper money. Hopefully, they'll retain all that and just learn their lesson from Bitcoin and maybe start buying gold and silver instead of Bitcoin. But again, you're not going to get rich quick owning gold and silver. That's just a way to preserve your wealth. It's not an easy ticket to Easy Street. You want to get rich, you got to earn it. You got to figure out how to solve problems. You got to try to anticipate what people may want and then figure out how to produce it at a cost that they can afford. And then you can get rich. But young people, educate themselves. Certainly read my books. You can get a lot of my stuff on Amazon, on my books, on my website, Schiff Books. Other Austrian economists, there's a lot of noteworthy books. I mean, the one that I got started with was Economics in One Lesson by Henry Hazlitt. It's a great primer. That's the one my dad gave me to read. And so I started out with that book and then went from there. But go to my YouTube channel and watch my videos, listen to my podcasts, schiffradio.com or YouTube on a regular basis. And I'm talking about these issues. There are other guys out there podcasting that are coming from the same perspective that I am. I have a pretty good way of explaining things and keeping things simple, so I think it's good for people who are just getting started and being introduced to these concepts. Because you're not going to get lost. I'm not going to be talking over your head. You'll really understand the things that I'm saying. I try to interject a lot of humor and analogies in a lot of things I talk about to, make it easier to understand. And then if you're at the point where, you've also got money, you've got some wealth that you don't want to lose, that you want to protect from inflation and what's going on, then you can hire, me through your Pacific Asset Management to help build and manage a portfolio for you that I think will do very well as this, this whole thing plays out.
Right. Well, Peter, thank you for that refreshing discussion. I'm so ecstatic to have the opportunity to speak with you because, well, while you've always been on a screen, the opportunity to speak to you is quite fascinating. So thank you, Peter.
Yeah. All right. All right. Take care.